Hey guys, Akil here. Welcome back to another weekend version of the Trading Edge video. If you guys are brand new, welcome. This is a video where I take you on a journey around the markets, showing you the best opportunities that are on my radar, and of course, dropping some educational rants in there as well. If you're brand new to the channel, make sure you do me a favor, hit that like button, hit that subscribe button, make sure that notification bell is hit as well. That way you don't miss future episodes, right? The worst thing you can do is be out of the mix and be confused about what we're doing each and every week. So make sure you make this a routine to listen to. It's been a decent week in trading, technically a losing week. I took 3 trades. I took a hit on the euro dollar, for about a 1.2% hit. Got out of dollar Canada, which was my trade of the week, for a break even. And I'm currently floating in a New Zealand dollar position that's right above targets, but hasn't hit target. So hopefully on today's open, we can smash down there and I can make some profit. But that was last week. Time to talk about this week. So let's start our journey around the markets. All right, so the first pair we're going to take a look at this week is going to be the euro yen. We're going to start here on the daily time frame, and you can see a little bit of the notes on my chart from this past live trading room week, where basically those are 2 levels that we wanted to see violate so we can really make our prediction that price is likely to continue lower. If you guys are new, I'm a big structure trader, so essentially all the decisions that I make in the market come off of structure, and it's based on where is current structure, how does price action react to current structure, and based off that reaction, I then make my next prediction on we're likely to do this, we're likely to do that, we're likely to go here, we're likely to go there. So seeing how we violated 2 levels of current structure to the downside, that allows me to make the prediction that price is most likely to continue lower. And the next question that I want to answer is, if we're most likely to continue lower, where are we likely to continue lower to? And then eventually, what ways can I get involved? So one of the tools that I'm going to use here is actually going to be something called a 1-to-1 measured move, or many of you guys know it as an AB equals CD pattern, an equal measured move. You'll learn in Forex that there's a lot of different terminologies for the same thing, depending on where you learn and who's your coach or who your mentor. But I don't really get caught up over the verbiage. As long as you know what it is, that's all that matters. So what I want to do is this. Again, because we violated price to the downside, I'm expecting a continuation lower. So something I can use to really help my prediction on where we're likely to continue lower to is a 1-to-1 measured move. So I'm going to take the length of our previous swing high to swing low here. I'm going to simply copy and paste it. Boom. I'm going to attach it into a little retracement that we had. That's this move right here. So this would be your A, this would be your B, this would be your C. And then what we're doing is we're projecting a potential decompletion that would be down here. And you can see that 1-to-1 measured move, or that decompletion, comes right at the 118 even handle, which is a psychological number. And psychological numbers are powerful. I know there are some people out there that say they have no relevance, but they do. Remember, the price chart is a visual representation of what we're doing, us, the traders, whether it's retail traders and smart money. Obviously, smart money moves the market a lot more, but smart money also knows kind of the dumb things that retail traders do. They know what levels retail traders pay attention to, and that's why you see some of these even-handled numbers that end with 0 zeros or 5 zeros, do play a role. They're not the most important thing in the world. Don't get me wrong. I wouldn't just look to trade them by themselves, but they can give you clues when you're really trying to pin down a level. And you can see, looking left, right, this was the level of structure that we initially looked at, this zone from right here to right here. And you can see that 118 even handle comes right at the beginning of that zone. So it's something that I certainly want to pay attention to. Something else that I'll do for confluence, we're not going to get an exact match on this one, but I'll take out my Fibonacci extension tool and draw a Fibonacci extension from our swing high to swing low. Let me just kind of want to move this around and make sure I get the correct low. There we go. Swing high to swing low. One more time. There you go. Swing high to swing low. Repeating myself. That way you learn it better. And I can look for a Fibonacci extension level. And you can see we have one right in that same area. So right about 117.87. So a good example is if I was strictly trading off that Fibonacci level 117.87, I would really just round up, I guess, to the 118 even handle for a little bit more safety. So this is my projection on where price action is likely to go to next here on the euro yen. And this does 2 things for us. For a counter trend trader, this is going to be your first location on where you can start looking for reasons to buy. Again, you may want to, obviously you want to wait until it comes within a level in that zone that meets your rules and meets your risk reward requirements. I typically like the bottom of zones personally, but as a trend continuation trader or even a day trader, this also allows me to see, okay, if I'm able to get involved in a move short, where I can ride it down to. And we're currently trading at 118.82. Plenty of room to trade this thing down to that 118 even handle. So Euro Yen is certainly a pair that's going to continue to be on my radar this week on both a swing trading and a day trading perspective, and also both on a counter trend and a trend continuation perspective. So pretty cool that we can do a lot of things and we have a lot of options with this pair. Next up, we're going to look at the pound yen. We're going to start here on the daily, then we'll work our way down. But I want to show you guys a daily just to kind of give you a higher time frame look, a bird's eye view of what this pair looks like. And it's pretty choppy. And initially when people see this, they stay away. I heard someone say the other day that you can't make money in consolidation, and that's completely false. You can make money in any market. You can make money while the market is consolidating. You can make money while the market is trending. It all depends on your trading style. Now, there are certain trading strategies that are horrible during periods of consolidation. So in those periods, you want to have a filter to keep you out or some reason to stay away. And then vice versa. There are, people that have strategies that are really, really good in consolidation, they're going to struggle during times of heavy directional movement. So like anything in trading, there's no wrong or right answer. It's kind of what's wrong, what's right to you, what's wrong to you, and making sure you do what you're supposed to do. Speaking of bird's eye view, I've been addicted to this show called This Strange Rock. It's on National Geographic. We got the Disney Plus for the kids, whatever like that. So we've been using it as parents a lot, and it's been talking a lot about Earth and the perspective from space. And it just kind of reminds me of this, because when you look at Earth from space, it's this big ball. You kind of get a bird's eye view of what's going on, a different perspective that you don't have on the lower time frames. And then once you actually go down to the planet, you can see how everything's kind of working together on a micro level. And we look at trading the same way. We always want to start with our higher time frame analysis, kind of have an idea, bigger picture of what's going on without looking for actual trades, and then work our way down. But in this instance on pound yen, you can see the consolidation continues, right? It's really sloppy, choppy movement. There's not really much we can do here from a directional standpoint. I don't really want to get long. I definitely don't want to get long from this level. I really don't have an interest in getting short, maybe a short-term interest. So what I can look for is patterns that happen during consolidation, and those are going to be your advanced pattern formations, your harmonic pattern formations, and we have two potentially setting up. So we'll start with a bigger one right here. This is going to be called a potential cipher pattern, where we start with our initial leg right here, swing low to swing high. That's going to be our X to A. Our first retracement is going to be our A to B. This extension is going to be our B to C. And if price action were to come down, I know we're a long ways away, but you guys get this video once a week for you guys watching on YouTube, so it gives you something to kind of pay attention to as the week goes on, and even in the next week. If we come down to this level 141.70s, you're going to have a decompletion, which is going to be an entry point for a bullish cipher, or at least the start of our kill zone for a bullish cipher. So an advanced pattern formation that you're looking to trade up. Now you can see within that, right, within this leg, we may have something before it as well. We may have a potential, looks like a bat pattern if I just kind of eyeball it. Yep, looks like a potential bat pattern as well. So if we do get that continued movement down before we even get to think about our cipher, and this may be clearer on the hourly, but I'm just going to draw it in here to save time, we may have another advanced pattern formation that completes right here at 142.29. That's going to be a potential bat pattern. Now, sometimes there are times in the market where you have to decide between one pattern or the other, and you should have rules for that. We discuss it a lot with our traders, but in this particular instance, unless you have very, very, very wide stops on your bat pattern, this would be one where you can easily take both, because you would be stopped out of the bat pattern before the cipher completes. Now, it doesn't mean you're going to get stopped out. The market can easily wiggle and do something like this, where it comes down, it fills you, and goes like that. We just never know, but just know it's not one of those situations, unless you're using insanely wide stops, which I wouldn't recommend, where you have to choose one or the other. You can certainly look to take both. Now, the hard part is going to be psychologically. The hard part is if, let's say, if you take this bat and let's say it goes down here and it loses, you're gonna have to fire off another trade or put another potential trade on right away, which could be frustrating. And I don't know how many of you guys know this story, but this was kind of I guess the darkest part of my trading career. This is when I was managing money. So imagine I struggled to learn how to trade for a very, very long time. I finally learned the skill of trading. I was taught, I had good coaches. I went on my way to develop a business. I started managing money. Life was looking good. I was doing what I wanted to do. I had acquired a skill. I had worked hard to really, I don't want to say master that skill because you never master the markets, but get really, really good at that skill. And then I turned it into a business where I can monetarily benefit off of that skill. And heard a lot of no's on my way to managing money, more no's than you can ever imagine, but eventually got a big one. I had a few small yeses, but finally got a big yes where I was managing a significant amount of money. And there was an instance where I essentially lost $30,000, and most of it came within like a week to 2 week span, but within a month. And a lot of it came, there was some fault on my behalf of trading. My portfolio that I was trading wasn't the smartest, and this was the lesson that taught me that. But a big part of it came because, or let's say this, it was as bad as it was, and it really wasn't even that bad, but it was as bad as it was, one, because I had upped my position size, something I didn't want to do, but the client had requested it, and I was too spineless to say no, that's going to get us into trouble. But the point is, after I took those streak of losses, right, it was a flood of losses all at once due to a natural disaster, I stopped trading. I broke down. I was scared to take any more trades because I was just frustrated. And when I turned on my computer a week later, right, I noticed that if I just would have kept trading and taken the next signals that came, I would have not only made up for the $30,000, but I would have made $30,000 on profit on top of that. So that was a major learning point for me about sticking to your plan, kind of forgetting what happened in the past. We have to have a very short memory as traders, forgetting what happened in the past and trusting yourself, trusting your signal, and firing off on that next trade, whether you feel like it's going to lose or not. Because honestly, you don't know. The only reason you feel like that is because the previous trade left a bad taste in your mouth. So something I learned, and hopefully by listening to this, you guys learned this as well. All right, so next up, we're going to look at the dollar Canada here on the daily once again. If you guys remember this, if you've been following along, this was my favorite opportunity of the week last week. Unfortunately, it was not a trade that I can involve myself in. What we had was we had a rising wedge with a lower low, lower close right at previous structure. It was a beautiful setup. However, it did not meet my rules for risk reward. And I think that's important to understand, that trading isn't just about one thing. It's not just about your entry reason, or it's not just about being at the right location. It's about being at the right location, the market being in line with your prediction, obviously your entry reason, your stops and targets as well, because that makes up your risk management. And that's a lesson that many newer traders learn the hard way. They come in, they think there's a lot of frequency in trading. They trade off of one thing and they get themselves into trouble. Once you get experience with trading, and many of the new members that have come to work with us, they see this, is that, we don't really trade too often. I think I'm up to 13 trades this year. It's February, so it's been a little bit more than a month since I've been trading, and only 13 trades, because everything has to work together. It's not just the trading opportunity, but it's also the risk profile of the trade. Is there a room for price to run to where, I am comfortable taking targets at? I don't want to overshoot my targets, because you never want to have targets at a location that's further than your prediction, because that just doesn't make sense. You're betting on something not happening. You also want to have a good risk profile as far as your stop loss goes. You don't want to risk too much. Your stop loss can't be too big, or that's going to throw off your ratios, and that's going to mess up your system's expectancy. So everything has to be in line, and this just wasn't the case. Now, another opportunity for you guys getting involved, because I've been getting this question a lot, Akil, I missed it. Is there any way I can get involved again? Not right now, but if we were to retrace up and give yourself a double top, that would give an opportunity to get involved here on the daily. So if you're still watching Dollar Canada, maybe you're someone that is new to the channel and you missed the trade, even though you shouldn't be trading anyway, if you're that brand new. But if you're someone that was eyeballing this and we're in the same situation as me, where you're just like, hey, I just couldn't get involved, a secondary opportunity for you to get involved potentially would be if we get a double top at that level, and then eventually maybe a 26.18, but we'll worry about that when it happens. Next up is the euro pound. Once again, starting here on the daily. And in trading, again, I mentioned earlier about structure and how that's kind of the backbone of everything I do. And with structure in mind, we go through a process called IPDE, identify, predict, decide, execute, where the first thing I do when I look at a price chart isn't look for trading opportunities. I simply want to identify where we're trading at. And you can see currently here we are trading at a level of previous structure looking left here. Nice little wicks there showing some buying pressure in the past. Very nice 3-bar reversal as well. And if we even zoomed out lefter more, we should be seeing, we should be seeing more previous levels of structure support at this level too. So it is a level that structure or that price has held before. And because of that, I would expect that price would hold there again. But of course, we just don't want to expect and predict. We want to make a prediction, but then we also want to wait for confirmation, right? We want to be predictive in our analysis, reactive in our execution. Now, one thing you may want to pay attention to are these lows right here I just drew in. These are sneaky lows. I learned this from experience in the market that when you have overlapping lows in the market, you want to be careful of the lowest one, or if it was flipped around, the highest one. If you can, get stops below that level, because the market likes to play those games where it knows a lot of stop losses are before that level, trigger those stop losses and then run the other way without you. So just be careful of that. Again, if you can make the risk reward work, you can't always do it. But we know we're at this level of previous structure. We can zoom in a little bit. We'll go down to the 240 chart. We can start actually looking for more trading opportunities. Here was a nice little trend continuation move we looked at in the live room, but let's get this off of there because it's done. And what we have here is a double bottom. So we've seen price action come down. We've held structure on the initial test. We retraced a little bit. We've come back down for another test. So this is something that, again, we were talking about waiting for on dollar Canada. You have one here on the euro pound as well. Now, again, we're kind of at the top of that structure level. So, you know, price does have room to rally lower. You just want to make sure your stops are below those lows. But you can look for a move really back up into this previous VS1 level, this green box. You can trade it from one green box at the bottom to another green box at the top. And you can see that's a pretty decent opportunity to get involved in a trade. And again, let's just see. I erased my chart. Let's see where that lower low was here in the daily, just to see if you can even stretch your risk below that. I don't think you necessarily need to, because you have a more conservative entry approach, and you can just be wrong and enter again. But just curious. Let's see if that was there. Yeah, so you can, even if you want it to be super safe, right? It's going to increase your risk a little bit, but you can get below those lows and still have a pretty decent risk reward level. So nice opportunity here on the euro pound. All right, lastly today we're going to take a look at silver, I believe. We did a lot of commodities last week. Yep, silver, I believe. And we're going to go here. No, not silver. Give me a second. Gold. There we go. Gold here. And we're going to look at a potential, just a structure-based trade. You can see gold has been in consolidation. And in consolidation, we would look for advanced pattern formations. And we're close to having one here, but we don't quite get it, right? I know a lot of your eyes would be drawn to this. And you're looking at X to A to B, B to C, and a CD completion. Say, kill, beautiful advanced pattern formation. But we actually don't meet my C requirements for a Gartley pattern. So it's going to be a no-go. If you have different requirements, follow your rules. If it hits, it hits. If it doesn't, it doesn't. For me, it's not going to be a Gartley pattern. However, we could have something else, right? I'm looking at us retesting previous structure highs here. And something I can use to predict that is, again, that one-to-one measure move. You saw us use this with the euro-yen earlier in the video, where we take that initial swing, we simply copy and paste it, clone it. There we go, here on TradingView, and then attach it to this leg and project an AB equals CD pattern. You can see that we're going to have AB equals CD confluence right at our previous high. So CTS traders, this is one where you would start going through your CTS checklist. CTS is combined technical score. It's basically a way we use to quantify trades and also get you in a routine of looking at things the same way each and every time. For you guys taking the CTS training right now, I know for the first time, right, you're probably looking at it and you're just adding the score up. You're saying, okay, this is worth 2 points. This is worth 1 point. This is worth 3 points. If I get a minimum of 6 points, I can take the trade, for example, which is good in the beginning. What you'll find is that the true power of it as you evolve as a trader isn't really the score. The score is good in the beginning because, again, newer traders need very, very strict rules on what they can and can't do. Providing them flexibility will usually allow them to just self-sabotage, which is not something we want to see them do. So we want to give you those strict rules. But you'll see it becomes a routine, right? As you go through your CTS checklist the same boring way each time, look for this, look for that, look for this, look for that, you're developing a routine of looking at the charts. And before you know it, you get in the habit of looking at the charts the exact same way every single time, and you're looking for the exact same things. So you're looking for the exact same things in the market, the exact same way each and every time, in the exact same order. And that's going to give you a very strong trading routine, right? Because consistent analysis plus consistent execution equals consistent results. Many traders have problems with consistent execution due to trading psychology, that thing that might matter a little bit, even though most of the internet will tell you it doesn't. But consistent analysis is key as well, right? I can't tell you how many traders I've spoken to where they don't have a routine of what time frame they start with, right? Let me ask you guys, listen to this video, right? 'Cause I know we have traders on the platform, we have traders on YouTube as well. Do you have a consistent routine, right? Are you looking at the same time frames each time in the same order? Right? When you enter a market, are you always looking at daily 4-hour hourly, daily 4-hour hourly, daily 4-hour hourly, daily for this, 4-hour for that, hourly for this, daily for this, 4-hour for that, hourly for this? Or are you sometimes going daily, sometimes going 30 minutes, sometimes 15, sometimes 20? If you're doing that, you don't have consistency in your analysis. If you're not looking for the exact same things in the market, AB equals CD, Fibonacci, structure, whatever it may be, moving average cross, you're not analyzing the markets the same way. So if you're not analyzing the markets the same way, how do you expect to be consistent in seeing the same signals, right? The same signals that, if you backtest it, should provide you with an edge, which you need to see in order to make profit, right? Do you see where there may be some holes there, right? So pay attention to this video because, again, I do the same thing the same way every single time. This is why people say the live room is boring. It's entertaining because we have very, very good conversations, but as far as analysis, it's boring because we look at probably anywhere from 10 to 15 pairs a day, and it's the same boring order. I look for the same things every single time, and it's boring, it's monotonous, but it's profitable, and it gets you into a routine. And before you know it, live room members are telling me what I'm seeing before I even see it, and that's when it's kind of cool. So I don't know how we got on that rant, but process is important, consistency is important. If you're someone that doesn't have a process for how you're trading and what you're looking at and how you're looking at it, my suggestion is to do so right away. Start developing one right away. But AB equals CD pattern up here at previous structure. So we're not up there yet, but once we get there, you're going to have structure. You're going to have AB equals CD. We can look for other elements of that CTS, your RSI. We can look for double tops, double bottoms. Could present a nice counter trend trading opportunity. What I would prefer is that we don't play around and that we go straight up to that level, because the smoother the path up here, the more opportunity it's going to offer for profitability for a counter trend perspective. If we start kind of dancing and consolidating and doing stuff like that, it's really going to kill the profit potential. So my hopes is that we rally up to that level, we get exhausted, we get some relief, we profit off that relief, and then we move on to the next opportunity. So hope you guys enjoyed this video. As always, please remember to hit that like button. Comment below if you have a comment, you have a question or anything. I check all of them, so leave it below. And I will see you guys on Monday's Q&A. Tier 1 traders, we're going to break down a trade plan once again. This has been a very popular feature, and you guys are feeling more confident in bringing your trade plans forward for me to break up, rip, destroy, and build back stronger than before. So we're going to do that in Monday's Q&A. And, of course, whatever other questions I get when I check my emails. But the kids' weekend, spend the weekend with my kids a lot. So it's like, haven't really checked the email too much. But until next time, plan your trade, trade your plan. YouTubers, make sure you subscribe to this video, watch every week, stay in the loop, right? Don't be an outsider. And I'll see you guys next week. Good luck in the market.